Salad takes a different approach to affordability assessments. We use open banking data. We don't use credit scores because we believe that many people are penalized by life events that have happened previously. Those negative markers on a credit score mean a low score. If you're, if you've never had, if you're young, you've never had a credit product, you have no score, you have no credit footprint. And we believe that we allow those people who are either not served or underserved by mainstream credit access to fair and responsible lending. And that's our mission. And our track record has shown that by taking an innovative approach to data analysis, it is possible to lend responsibly to those individuals who are ordinarily declined. Salad has been almost unique in the CDFI personal lending world at proving the concept of it is possible to view people differently, take a different lens for their credit affordability. And Salad had a vision from the founder Alan Campbell and from the original executive team to use technology to better assess a person's affordability and their likelihood of repayment. And that has led to significant growth, Salad being the largest personal lending CDFI in the UK. And that is a great achievement. And it's a model which we want to grow further from here. But going to the King's Award, yeah, this was awarded in March this year. It is a huge achievement to be recognised this way by such a prestigious organisation, and we believe Salad is the only lender of its type to receive this award in its 60-year history. So it's an award for innovation, and it is recognising our innovative use of open banking data and our crouton model, which assesses a person's likelihood of their repayment. So it's a huge achievement, and the team at Salad are very proud. And you'll see the logo on our website and on the Ethex video, and there'll be some other PR related to this as the year goes on. So all of the raise has gone out, it's been lent out. Some of it's been recycled, given the short-term nature of our loans. And that has been providing access to people who ordinarily might have got declined. So the funds there, the proceeds have been put out there. So the impact is people are not having to resort to higher cost alternatives. They're not having to go to loan sharks. In the application process, they have benefits that have been identified that they could claim that they're not getting today. So hopefully we've provided a lot of financial resilience to people who otherwise wouldn't get it. Why are we raising money again? Exactly the same reason. I mean, in terms of why we're coming again so soon, ordinarily the gap between our raises is shorter, but we've been very busy. There's been a CEO transition, and so we haven't. It's been a little bit longer between the fourth and the fifth raise, but the reasons and the proceeds, the use of proceeds is exactly the same. All of it will go out for lending. Thankfully, we don't need to have any of this investment used to cover costs. It all goes to lending. My experience of credit unions, and they do a fantastic job in their local communities, but my experience of credit unions in terms of who they typically lend to, they often use credit scores as part of their loan decisioning. I would, and we've known that when we've looked at in my experience before working at Fair for All Finance, I have looked at the lenders, the typical customer of a credit union. Because they use credit scores, they typically do not lend to the people that Salad is lending to. So in summary, we have higher costs than the credit union in terms of our cost of capital. We have higher defaults because of the customers we're serving, but credit unions don't serve a huge proportion of the customers that Salad serves. So Salad's typical customer, the male-female split is roughly equal. There's a lot of single parent families, and where that's the case, it tends to be a female parent. They are people who earn the close to the national living wage, but they can also get benefit income as well in receipt of that. So things like universal credit. We tend to have more public sector customers than the national average or the population at large. And the vast majority of our customers, over 80%, are renters. They don't own their own property, they rent, be it social housing or private landlords or council housing accommodation. So they live to their means. Anything that is unexpected, an unexpected event or expense, it throws them off course. They need to seek credit with a short-term fix. And not all of those events are actually life-changing events. Some of it is as simple as repairing a car or replacing a broken washing machine. I think the alternatives, so we see that because we have open banking data, 70% of our customers on our loan book today use high-cost short-term credit. And by that, I mean APRs in excess of 100%. And unfortunately, a lot of the same names come up with our customers, and they're regulated entities, and they charge APRs in excess of 1,000%. And why do we look at that? I mean, we look at that because the fact that they're paying such high levels of interest on the debt outstanding means that that's a credit risk to us. So we have to make sure that they're not overly indebted in absolute terms, but also not relatively overly indebted to lenders that are charging APRs of over 1,000%. Then if you start to talk about friends and family, don't assume it's interest-free. Don't assume it's friendly. And the consequences that come with that. I mean, loan sharks remain very prevalent in the UK, and people are paying not even financial, but they're paying mental health consequences of having to resort to that high cost alternative. If you're in a situation where you can't buy your children the school uniform when they start school in September, and you have it's a mental health crisis. It's stress on the family. It might have a negative impact on family relations. So just at its basic level, having good financial well-being and resilience is about people having access to things we don't even think twice about. We've got most people on this call will have savings, they'll have a credit card, they'll have maybe an agreed overdraft facility. We don't ever have to come across those situations. But what Salad does for the long-term health of our customers is providing that access. If you have a successful repayment record of our loan, we report that loan to 3 credit rating agencies. It will positively, and we've shown it in the data, it will positively impact your credit score, all other things being considered. In time, your credit score can improve such that you may be able to access more affordable forms of credit in the future, tools such as a credit card, agreed overdraft, or a cheaper source of unsecured loan capital as well. So we would love to be able to say Salad does a job and then we can just sort of wave you off to mainstream finance. It is a bit of a long journey, but we are able to get people on the first rung of that credit ladder, to improve their credit score, and to provide them long-term access to cheaper forms of credit for decades to come. And the value of that proposition is substantial. The system is broken.
Yeah.
We look at the system differently, and we've shown that we can provide access to credit in a responsible, affordable, and fair way that is not being done by the system at large. And I think for all people interested in investing in this bond, that is the key thing here. We're doing something that is unique, at scale, and makes a huge difference to people's lives beyond simply the £1 in their pocket. It goes over and above that.